Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 23rd of August, and it was a good week for the markets. We were up 1.5% for the SPY. Russell was the leader, that in the biotech. So those two often are travel in the same direction at about the same pace as well. The S&P now just 0.5% off the all-time highs, and the financials did make a new all-time high. So also a big week for Bitcoin, which was up 7%. So we'll take a look at all those. Starting with the S&P 500, I was hoping we would see maybe a little bit of consolidation this week. Instead, the market continued higher. It is still above that rising five-day moving average, so the buyers have the benefit of the doubt. This is something I shared a couple times on Twitter the last couple weeks or 3 weeks or so. And this is simply the S&P 500 in the upper left, the Nasdaq rather, upper right. Bottom left is the semiconductors and biotechs on the bottom right. This is a 30-minute time frame, which is approximately from the beginning of this month. And what we have here is just a simple five-day moving average. When we're above that five-day moving average, then the market is green, is shaded green, just saying we're making higher highs and higher lows above a rising five-day moving average. When the five-day moving average is rising and we have bars below it, then it's yellow, telling us maybe we're getting ready for some profit taking. And you can see that's where we are for the S&P, and the Nasdaq is kind of fighting with that five-day moving average, but the five is still rising. Biotechs are the healthiest of these, and the semiconductors may be showing a little bit of distribution. We'll take a look at the picture on the TC2000 charts right here. And you can see what we want to do is maintain above this little band of support here at about 554.5 for the S&P 500. As long as we're above that early next week, then I don't think we're going to see any more serious profit taking. But if instead we kind of do something where we come down and test it, make a feeble bounce with a lower high and get trapped below the five-day moving average, then it's possible we'll start to see some deeper pullback, and maybe we'll pull back to the anchor from this low or from the low that we saw that flush out at the beginning of the month. So for now, you have to treat it as innocent until proven guilty. Maybe just a little bit of caution as we've maybe seemingly entered a little bit of a range this past week, but still bullish overall. Just a little bit of caution. Same is true for the Nasdaq. The Nasdaq, what I was hoping for, I had sketched out, if you recall last week, was hopefully a pullback down towards the 20 that would create a inverted head and shoulders pattern. We don't have that, so instead we give the benefit of the doubt to the buyers here above a rising five-day moving average. And the key level for next week is probably at about 472. If we break below that and then hold below it, then a test of the anchor from the year high would come into play, and then we would start to look at some of these other levels, such as the anchor from this low, which actually comes in at the anchor from the high. So I think that's going to be an important level, definitely, that you want to keep an eye on. Let's take a look at that together. That's about 466.5. So be aware of that level if we pull back. Otherwise, it's innocent until proven guilty. And below that, if it breaks, then the next level would be the anchor from this low. And we could do the similar thing that we did on the upside, which is to look at, let's say this was the peak, then a 38.2% retracement, 50 and 61.8. Those are just levels of interest if we begin to pull back. Now, I have pretty much avoided the Russell 2000 in terms of the index. I trade a lot of the stocks that are composed of it, so I really don't care when the Russell itself rallies without me. This has been just a very choppy market all year. The movement doesn't always make a lot of sense to me, but we are still above that rising five-day moving average, and we made it through what was supposed to be resistance. So, as I always point out, prior support tends to act as resistance, but if we get up there and poke at it, it doesn't mean it's resistance, not when we have higher lows running into that, and then we break through it. So, buyers are in control of the Russell 2000. If we take a look at the weekly time frame for some perspective, you can see we're still in a bullish uptrend here and looking like the buyers can potentially continue to push this higher. Let's take a look at these semiconductors. They still are fighting with two important levels here, and that is that blue 50-day moving average on the daily time frame. And by the way, this is where we were 50 days ago, 49, 48, 47, 46, etc. So in order for that 50-day moving average to begin to rise again, we're going to have to get above these levels next week. So even if we get above that 50-day moving average, it will continue to decline. But what we have here at that 50%, I'm sorry, at that 50-day moving average is also the 61.8% retracement of this high to this low. So right up to the 61.8% retracement. And we're holding in here. We're not going lower, but we're not going higher. So the question is, if we break below this low at about 240 and a half, then is it going to be something that leads to further downside, which might drag the rest of the market lower as well? If so, we would look for these couple of anchors to be the levels of interest on the downside, or is it going to shake out and then continue to move higher? I'm prepared for either one. Right now, though, I like the fact that we're starting to turn sideways and digest these gains through time, meaning we're just seeing some profit taking up in here. We're not seeing aggressive selling, which is pushing it lower. Always be prepared as a swing trader for a move in either direction, but give the benefit of the doubt to the primary trend. The biotech stocks, as noted, these have been a leader. They continue to be above that rising 5-day moving average. They bounced off of it yesterday, or we touched on it Thursday, and today we bounced off of it. We're above a rising 5-day moving average. We're above what will be a rising 20-day moving average on Monday, the rising 50 and the 200-day. Here's one that, again, on the weekly time frame, this really looks to me to have the best potential of where we are in these markets right now. If we can break through this band of resistance here, I don't see why we couldn't be making a move in the biotechs up towards that 120 level. Doesn't mean it's going to happen next week or in maybe by the end of the year perhaps, but there's been some great movement in the biotech stocks. That TGTX continues to be a nice winner, and there's many other ones in that group as well. If you follow me on Twitter, I point those out sometimes, but more often I hold them back for Alpha Trend subscribers. Not more often, I do hold them back for Alpha Trend subscribers. By the way, if you're watching this on YouTube, please give it a like, subscribe to the channel, share it with your friends, and all that sort of thing. But biotechs are really the stronger group. I'd like to see them digest a little bit this week, simply because we've run from 92 to 102. That's basically a 10% rally here, uninterrupted, without much pullback. It doesn't mean that market will comply with what I want, but here you can see maybe we see a pullback in here, and kind of similar. You could see this is a shoulder, this is a head, and create a shoulder for a break beyond this band of resistance, which would put us into this bigger level on the weekly time frame, and we'd be able to maybe make some progress into this area. So biotechs continue to be a fertile hunting ground for individual stocks, and that's where a lot of my attention will be for Alpha Trend subscribers. Financial stocks, there was no slowdown at this prior peak. When we see a rally from 40 and a half to 44, again, almost 10%, you want to be careful with these breakouts. Just be aware that if you bought the breakout, you're making money. That's great. Just know your time frame and the definition of trend. I would think that if it gets back below this low, it would invalidate this breakout, and that might mean from a failed breakout could come a fast move lower in the opposite direction. Just be aware of that. We are at all-time highs in the financial group, so it's tough to be bearish when that happens. But just always be prepared that what's obvious sometimes doesn't follow through on these breakouts, especially after they've run 10% to get there. Not calling for a reversal, but just saying if it does, be aware and know where your risk is. Bonds continue to behave well overall. They're difficult to trade the TLT because of the daily gaps. As I pointed out, they have a 20% of the risk you cannot control due to gaps each day. So I stay away from that personally. I also stay away from energy, and especially when it looks like this. This is just a mess in here. I said it last week, and it continues to be a mess. Anyways, just a short one this week. Oh, you know what? I was going to talk about Bitcoin. Let me make sure I don't forget that, because we did see some good movement in Bitcoin. Let's take a look at this daily time frame, you can see we made it past that 62,000 level. So on the right is the 4 hour time frame. Each one of these bars represents 4 hours. And we had run, from that decline, we rallied up and we're finding supply at that 61.8% retracement. We hammered through that, and today we pushed right through. Now, the important thing about that 62 wasn't just that Fibonacci, but the fact that this purple was the anchor from the 2024 low. And you can see we were hammering away at that, and as well as the anchor from this peak. So we made it through there. And where did we run to? Straight into the anchor from the all-time high. So it tells me, yes, the buyers have control of the intermediate term time frame, but maybe some pullback and even test that 62,000 as support before it's able to make another push higher. Let's take a look at a tool I don't mention a lot, which is the um, volume profile, and this is an anchored volume profile. We could, take an anchor from down here and measure, but if we're trying to look at and understand where the volume is from this consolidation, basically between 55 and 72, what we want to do is say, let's look at the trading between that range. Where was the volume? So if we anchor it there, you can see this node, the largest node, which is known as the point of control, is where the heaviest volume occurred at about 67,300. So I'd like to see it maybe pull back down towards 62, make a run up towards 67, consolidate, and then maybe be able to make a break in the fourth quarter up to new all-time highs. But it's impressive it was able to make it through 62. Let's see if that can hold as support now, and perhaps we can start to work through this bigger level of congestion and make some better upside progress in Bitcoin. Thanks for tuning in and have a good weekend.